Welcome to XM.com. You're watching today's market comment by Ref Boyajian. I'm Cristina Marujas. The Federal Reserve will kick off a barrage of central bank meetings on Wednesday as policymakers set interest rates for the final time in 2023. The European Central Bank, Bank of England, and Swiss National Bank will announce their decisions on Thursday before the Bank of Japan wraps up things next Tuesday. With inflation seemingly coming under control in all jurisdictions, investors are gearing up for the first explicit signals of a dovish pivot. However, it's likely that policymakers will only go as far as flagging the end of the tightening cycle, so there is significant room for disappointment. Ahead of the Fed's decision, due at 7 o'clock GMT, the November CPI report did little to dampen speculation about aggressive rate cuts. Headline inflation in the US eased slightly to 3.1% year-on-year, but core CPI was unchanged at 4%. The figures highlight the possible challenges that central banks face in overcoming the final hurdle and reducing inflation all the way down to 2%. The US dollar was somewhat firmer on Wednesday as the immediate reaction to the CPI numbers faded, with some investors questioning the sooner rather than later call for rate cuts, even as Treasury yields edged slightly lower. The pound came under pressure for a second day on the back of a string of disappointing data. Yesterday's soft employment numbers were good news for the Bank of England, which wants to see lower wage growth, but today's worse-than-expected GDP estimates are somewhat more worrying, as it highlights the risk of the UK economy entering a recession. However, the Bank of England is unlikely to drop its tightening bias when it meets tomorrow, in what would be a mixed blessing for sterling. But there were few signs of recession worries in equity markets as rate cut bets continue to support risk assets. The S&P 500 closed at its highest levels in almost 2 years on Wednesday, while the Nasdaq Composite touched the highest since April 2022. While much of the gains are still being driven by big tech stocks, there are substantial downside risks heading into today's FOMC decision, and perhaps even more so from Powell's press conference. The Fed chief will probably attempt to push back on rate cut expectations and leave the hike option firmly on the table. This was today's market comment. Thanks for watching at XM.com.